Gary, I still don't really understand it.
It is not backed by any sort of business that is producing goods and services.
I don't know what the meaning of it is. All I can tell you is, as an asset, the price has just been going up, up, and up.
Besides its appreciation, I've heard no good reason for owning it.
Bitcoin is now an institutional asset. It's being embraced by Wall Street through spot ETFs. It's being added to corporate treasuries at an increasing pace. Even the US government has started a strategic Bitcoin reserve, and yet most people still don't get it. Today we're going to look at 3 moments, from network news to financial TV to a high-profile debate, that reveal exactly why mainstream thinking keeps missing the point, and why this misunderstanding is the opportunity of a lifetime. Welcome to No Second Best. I'm Hurley, your host and director of content at Swan. Now let's dive in. Bitcoin looked to be primed for an early week breakout as it climbed above $122,000 late Sunday evening and early Monday morning, coming less than $1,000 from its current all-time high of just over $123K. But since then, it's cooled off a bit, settling down just below $120,000, which I remind you is just less than 3% down from all-time highs. Bitcoin treasury company bids are expected to continue this week, as they have every week, with the large notable buy looking to come from Nakamoto, which is run by BTC Inc. CEO David Bailey. Yesterday, Bailey posted this on X. Ever since getting into Bitcoin, I've always had this dream of smash buying $1 billion of Bitcoin in a single bid. Tomorrow, that dream comes true. Gotta start dreaming bigger. He later clarified that he's rounding up. The actual bid coming in today will be around $762.5 million. So with demand continuing to surge from ETFs and these Bitcoin treasury companies, the real question isn't if the price will gap up to meet it, it's when. And the ongoing and increasing discussion of the fate of the 4-year Bitcoin cycle continues. This time, Bitcoin OG Pierre Rochard chimed in, saying, "It seems more likely than not that the 4-year cycles are over. Halvings are immaterial to trading float. 95% of the Bitcoin have been mined. Supply comes from buying out OGs. Demand is the sum of spot retail, ETPs getting added to wealth platforms, and treasury companies." Pierre is a very respected voice in the Bitcoin space, notably having written a piece way back in 2014 called Speculative Attack, which predicted the day when companies would borrow cheap fiat at extremely low interest rates to accumulate the scarcest asset in existence, in Bitcoin. Which is, of course, exactly what we're seeing today with these Bitcoin treasury companies. With Pierre's input, I'm more confident than ever in my stance that the traditional 4-year cycles based on the supply change from the halvings is most likely behind us. And I think this points to what we've talked about on this show a lot over the past few months, that this likely will lead to an extended and longer duration Bitcoin cycle. And as we've pointed out before, a big part of this thesis is the fact that the Fed has still not even lowered interest rates yet. Well, Trump came out with guns blazing against Fed Chair Jerome Powell, again saying he must lower rates now. He went further this time, threatening a major lawsuit due to the, quote, horrible and grossly incompetent job he has done in managing the construction of the Fed buildings. The market is pricing in an over 90% chance the Fed begins lowering interest rates in September. So with Bitcoin sitting just shy of all-time highs, large institutional bids coming in every single day, and the economic boost of lowered interest rates on the horizon, the Bitcoin thesis is looking stronger and stronger by the day. And yet, even with all this, step outside the Bitcoin space for a moment, and you'll see that the vast majority of people still don't see what's happening. So why is this? They're trying to fit Bitcoin into the same boxes they use for stocks, bonds, or even collectibles. And in the process, they're missing the point entirely. Case in point, a recent segment on CBS featuring Amanda Fisher, former chief of staff to Gary Gensler at the SEC. Listen closely to how she frames Bitcoin and what that leaves out.
How should people think of crypto? Is it like gold? Is it a stock? Is it a Beanie Baby or maybe a Labubu? You could think of it as gambling. You could think of it as a collectible. You could think of it as a type of investment. But I think what's important to understand is that crypto is highly volatile. It's highly speculative.
Amanda Fisher served as a top official in the Securities and Exchange Commission under President Biden.
Crypto is often marketed to individuals as an investment opportunity that will yield them the possibility of great returns. But unlike, say, a stock, which represents a part of ownership of a company, it is not backed by any sort of business that is producing goods and services.
Unlike hard currencies like the dollar or the euro, cryptocurrencies only exist online and are issued by individuals and companies, not central banks. And yet billions of dollars worth of crypto are traded every day.
The number of scams, the types of scams, the sophistication of scams are so rife and plentiful that the capacity to lose your money in a crypto investment is substantially higher than if you're just investing in stocks and bonds.
Now, there is so much wrong with this CBS segment that I barely know where to begin. The whole thing feels like it could have aired 10 years ago. They, of course, lump Bitcoin in with all other crypto, and the whole segment portrays it as a malevolent force that infiltrated the government via a self-serving Trump administration. And as you saw in that clip, they even go as far as to call the dollar a hard currency, which is completely ridiculous and laughable considering the dollar has lost 99% of its purchasing power just over the last 100 years. But her views on Bitcoin, which she puts under the umbrella of crypto, seems to be the default mainstream view. Reduce it to speculative gambling because it doesn't look like a stock or a central bank issued currency. But that's exactly the point. Bitcoin is a monetary network, not a company, and its value proposition is precisely that it isn't controlled by any CEO, board, or government. The no business behind it critique misses that money itself isn't a business. It's a base layer for storing and transferring value. And unlike fiat, Bitcoin's monetary policy can't be changed on a whim. In the segment, she goes on to compare Bitcoin to subprime mortgages and complex financial derivatives, proving how little she understands all three. And this is coming from the person who was a top financial regulatory official. Truly astonishing. But it's not just regulatory officials and politicians who don't get it. This next clip from Fox Business featuring Natalie Brunell shows just how perplexing Bitcoin is for the average person who hasn't done the work to understand it on a deeper level.
But Bitcoin is going to be that pristine savings technology and capital that corporations are looking at to put on the balance sheet to strengthen against the debasement that we know is going to come. We know they're going to have to print. We know that the deficits are going to continue. And so Bitcoin is the one thing immune to that. It's the one thing no one can print.
I talk to you all the time. We talk to you. We ask you questions. We learn. I got to say, and I'm embarrassed to say, but I'll be honest with everybody, Gary, I still don't really understand it. So if I really don't understand it, it's hard to get in as an investment. But yet I watch it just keep moving higher and higher and higher. And I'm thinking to myself, if there is not an aspect of my portfolio that's invested in crypto in some way, I am losing out.
You just took the words right out of my mouth. I have been saying since day one, I don't understand. I don't know what the meaning of it is. All I can tell you is, as an asset, the price has just been going up, up, and up. Yeah, it had a 75% drop in the last bear market. I'm thinking that's it, it's over, and right back. But I do worry the next bear market in the NASDAQ that it's going to come down because it is an asset and the fear and greed factor. What I don't understand when I hear, I think it's Saylor that says it's going to 13 million in price. These are the things I don't understand. But look, I've watched you on TV for a while with big smile on your face, and you've been right as rain. I can't argue the point. I never argue against price.
Can I just say two things? Number one, Bitcoin priced in the S&P 500. The S&P is down 85% priced in Bitcoin. You're super early. We're all very early to Bitcoin, and I say that because it is a $2 trillion market cap competing with equities, bonds, gold, real estate, which are hundreds of trillions of dollars of wealth. If we just reached 20 trillion, which is gold, that's over $1 million per Bitcoin.
But there's no earnings, no sales, no product, no service.
That's a feature, not a bug. Look at the tariffs, right? No chairman of the Fed, no CEO, no earnings.
30 seconds,
You're
Ryan.
winning.
Now, Natalie did an excellent job in this segment as always, but the exchange between the two anchors at the end is a great illustration of the disconnect. This is what happens when you judge Bitcoin only by short-term price moves and fear and greed cycles. They're again looking for earnings reports and quarterly guidance, as if money itself should have a P&L. And that's simply a category error. Because as Natalie points out, the absence of earnings is a feature, not a bug. It means no one can dilute you, no one can redirect profits, and most importantly, no one can print more. Bitcoin isn't here to generate cash flow. It's here to preserve purchasing power in a system where every other asset is being debased. Finally, let's look at a clip from the recent debate between Lynn Alden and Andy Constant on what Bitcoin did. Listen to how Andy frames this question and what it reveals.
Besides the appreciation, which, listen, anybody, corporate, levered, unlevered, anybody who wants to speculate on an appreciation of a thing can part with their cash and buy that thing. But assets throw off income, particularly corporate assets. Every company decides how to spend its cash. And Michael Saylor's, I guess all these companies would have been better off using their cash to buy Bitcoin. Well, some bought their shares, and that was a pretty good return on investment for Microsoft, for instance, who Michael tried to convince to do a Bitcoin treasury. I don't get why someone would choose to use their cash to buy an asset, given all the assets they have in Bitcoin. So that's one. And then secondly, if they were to use it as an asset, besides its appreciation, I've heard no good reason for owning it.
Andy describes himself at the beginning of the debate as someone who understands Bitcoin and the importance of holding hard assets like gold for debasement protection. But the fact that he struggles to see a reason to own Bitcoin beyond price appreciation is baffling. He seems to fall into the same trap that so many in traditional finance fall into. If an asset doesn't produce income, they can't fit it into the valuation models they've used for their entire careers. But store of value monetary assets aren't valued on cash flow. They're valued on scarcity, durability, and credibility. Gold, land, fine art, none produce earnings. Yet they've preserved wealth for centuries. Bitcoin takes those properties and adds portability, divisibility, and absolute supply certainty. That's the reason to hold it before the price appreciation, not just because of it. And this is exactly why I keep on saying we're still so early. Even as Bitcoin cements itself as a legitimate institutional grade asset, embraced by Wall Street, backed by corporate treasuries, and supported by national policy, it's still not understood in any meaningful way by the vast majority of people. And that's because they can't yet see it through the right lens, a monetary lens. Until you view Bitcoin as money, not as a tech stock, not as a collectible, not as a gamble, you'll never grasp why it's the most important asset of our lifetime. If you're ready to approach Bitcoin from that perspective, to think in decades, not days, then I'd encourage you to connect with a team at Swan Private. The Swan Private team works with high net worth individuals, businesses, and institutions to build long-term Bitcoin strategies geared for generational wealth. Visit swan.com/private to learn more. And if you want to meet the people building that future in policy, in finance, and in infrastructure, join us at BTC in DC this September at the historic Kennedy Center in the nation's capital. Visit btcindc.com and use the promo code SWAN for 10% off tickets. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So do you think the majority will ever catch on before Bitcoin becomes the global base layer of value? Or are most sadly destined to miss out and get burned? Let me know in the comments. Don't forget to like the video, share it with someone who still doesn't get it, and subscribe to the channel for more videos like this. Thanks for watching, and remember, there is no second best money.